This episode is brought to you by Indeed. When your computer breaks, you don't wait for it to magically start working again. You fix the problem. So why wait to hire the people your company desperately needs? Use Indeed's sponsored jobs to hire top talent fast. And even better, you only pay for results. There's no need to wait. Speed up your hiring with a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Reality radio for a really great future. We're talking real money.
Welcome once again to Talking Real Money, and dare I say, one of our more exciting episodes. Hello, everybody. I'm Don McDonald, along with the inimitable, because you can't possibly imitate him, Tom Cock, in the Model Military Aircraft Museum.
Wait, I was at the pre-show meeting. I don't think this is going to be one of our better shows.
Oh, that little thing
I'll take
we
your
did?
word for that.
Yeah, that wasn't much. Yeah, it wasn't.
Yeah,
It wasn't
at 0900. Yeah, well, we kick it around a little bit.
I did. I actually
okay.
have one that I'm going to share with you in a little bit because it came in the mail. So it just was a big surprise. I got it in the mail. Anyway, today we're going to violate our very own rule. We are. We're gonna break a rule, and that is
What?
not. We don't want to talk about Bitcoin anymore. But we can't help it. I think we said we were going to try really, really hard. We haven't in a while, but we kind of have to today.
No,
Because, well, one, Bitcoin has once again gotten to stupid prices, but there's some talk about Bitcoin and, by extension, cryptocurrency, proving that investment markets are, contrary to what all the Nobel Prize winners say, not efficient markets.
and this will be a fascinating discussion because this is academia versus, Wall Street. I mean, versus Main Street, right? I mean, because this is kind of what's actually happening versus what people say. This is what should be happening. I don't want to touch on cryptocurrency if I can avoid it.
It's very uncomfortable, and it makes people very. It evokes visceral reactions.
It does. And still, by the way, now that Bitcoin is, I hate to say it, up 55% in the last year, more and more people again asking me, kind of when are you guys going to, take the leap into the lake or the leap with Bitcoin, whatever it is. So, and then there's a lot of questions about why, why is it the fact that there's been this regulatory change or allowing exchange traded funds to, have Bitcoin in them? Is it the fact that the president is embracing cryptocurrencies? Is it the fact that at the end of the day, the price has gone up because people think the price should go up?
No. Actually, what's the argument is the price is going up because the price has been going up. Kind of. I mean, it's a self-fulfilling prophecy. And the argument is that because of the fact that it's going up, it must be the right price thanks to the efficient market theory, that this must be the price at which it's supposed to trade. But that's assuming for a moment that the cryptocurrency markets are legitimate investment markets. And that's where I find some cracks in the argument.
Yeah, and this Cliff Asness recently said the internet, especially social media, have made communications easier. Therefore, collective judgment in his mind has gotten worse. Now, I read that, I think, well, no, wouldn't the fact that information is moved around more quickly, wouldn't that make it better because everybody has the same information? 50 years ago, that was not the case. You were waiting for your morning newspaper. You might listen to the radio, tune into TV or something, but you didn't have it on your phone every 10 seconds being updated with whatever new piece of information is available.
But that's his argument, though, that because it's not because there's more information, it's because the information is becoming the same. It's siloed. You have the pro camp and the negative and the con camp. And so those in the pro camp are barely listening to anybody in the con camp. So there may be an argument, and we're going to talk about the argument for why this is not likely a real investment that would be efficient. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
At Capella University, you can learn at your own pace with our FlexPath learning format. Take 1 or 2 courses at a time and complete as many as you can in a 12-week billing session. With FlexPath, you can finish the bachelor's degree you started in 19 months and under $19,000. A different future is closer than you think with Capella University. Learn more at capella.edu. Fastest 25% of students. Cost varies by pace, transfer credits, and other factors. Fees apply.
Your guides to a really great financial future. Tom and Don are talking real money.
That's the name of the show. And what are we here to do? Well, we're here to talk real money. Hello, everyone. Don McDonald here along with Tom. And our phone number, if you'd like to call us, and it's not a holiday weekend, so it should be easier. Should be easier for you to actually call. 855-935-TALK is our phone number. That's 855-935-8255. Stop by, no matter what your question or comment might be, as long as it's money-oriented. And, broadly speaking, pretty much everything is. It's really hard to come up with something that doesn't involve money. Really.
Indeed. Yeah.
I've had people try. We've done this on previous shows. Mm-hmm. So tell me a topic that's not money, and I can connect. I think I've never failed to connect one to money.
Yeah.
I can't think of a
You're still the guy who
one.
came up with the 3 ways to make money, whatever, in your book. What was it, 3 ways or 4 ways?
Oh, there are only 3 ways. No one has effectively challenged it.
I know.
The 3 ways to make money. And it can be a combination of them. It can be a combination of them. It's work, luck, and dishonesty.
Yeah, okay.
Those are the 3.
That's stealing. Yeah. Okay.
Yeah. And now there
Takes
are various subcategories to those.
Sure.
And you can have combinations thereof. You can have somebody who's the CEO of a big corporation who's worked really hard and they're trading illegally or something. There's combinations. But there are literally only 3 ways to make money, and we're going to talk about those ways with you at 855-935-TALK, 855-935-8255. Reluctantly, our topic today is cryptocurrencies, particularly the big one, Bitcoin.
Yeah, I mean, I would prefer to turn this into a discussion of markets, because that's what I think the lesson to be learned here is, because I don't want to go. Can we do the Harvard Debating Society? Do they still do? Can you still call it the Harvard Debating Society? I didn't know, but
yes, you just can't be from China and be in it.
Okay, and call it the Harvard.
Yeah, I think that's the rule. I don't know.
This whole discussion about whether markets are efficient or not, right? Whether or not you can sort of know something. Well, you could know it illegally. Whether you could know something that others wouldn't and trade on that information, or know it more quickly and trade on that information. Again, doctors Fama and French, with the efficient market hypothesis, have said, asset prices are correct. They reflect all the information. And others now are looking at some of these new assets, Bitcoin among them, and saying, wait, if you look at the track record now, we can say they're not. But the question at hand to me still would be, what does that all mean? Why do I care about that? I'm an investor. Does it matter?
Well, yeah, I guess it matters, because if someone is effectively arguing that Bitcoin is fairly priced, or that it even makes sense as an investment, there needs to be some means by which to rebut those statements of fact that are in fact only fact of the current situation of our psyches. And I think that has a lot to do with it. It's the way our brains work. We are following the crowd because we don't know enough to know what we don't know.
I think that's correct. Rational ignorance, I think, was used in this article as well. That you're sort of, that he's doing it, they're doing it, I'm on board. There's somebody else figuring all this out. I'm going to follow them. Seems to be working. Good trade. Sure, I'll buy it. It's going up. By the way, nothing is going anywhere. It's only gone. So that's a fascinating thing to me, that this asset somehow is suggesting that the world is different when it comes to trading markets. I do not buy it, because I don't think you can trade on that either, by the way. I think you'll get whooped.
And speaking of one of the biggest proponents of the efficient market hypothesis, that would be the aforementioned Eugene Fama. A couple of months ago, he said when asked about Bitcoin, he believes it will plummet to zero within the next decade. He said, I would say it's close to certain. I still believe in monetary theory, though, and I could be wrong.
When did he say this?
February.
So 10 years. The clock is ticking.
Yeah.
Okay.
10 years.
I hadn't heard that.
And here's the other thing, is if Bitcoin made great sense, then why does Bitcoin make more sense than other cryptocurrencies? Why is Bitcoin valued at $2 trillion today when all of the other cryptos are, like they pale? For example, the second biggest crypto in the world is Ethereum, which is dollar denominated, and Ethereum is trading. No, is Ethereum dollar?
I think it is. Oh, I didn't know that part of it.
No, it's not.
Number two.
It's trading for $24.51. The one that's dollar denominated is Tether. It's $1 for Tether.
Tether makes sense. Yeah.
Anyway, it's $300 billion, a fraction of Bitcoin's value. Yeah. And as you go down the list, particularly when I look at the 10th largest cryptocurrency, this is where I think the whole stupid theory falls apart. Bitcoin was created to actually be a unit of financial measure and used in commerce. It was created for that purpose. Number 8 in market capitalization, coming in at $29 billion in market cap, was a meme coin created strictly as a joke.
Which is?
Dogecoin.
And you'd think that would be out just due to its poor branding. I mean, what it tried to do the government, et cetera, you think that would go away.
But Dogecoin was literally started by a guy who thought, I'm going to name a coin after my Shiba Inu dog and start selling it. And the guys, I mean, I don't know where the guy who started it is, but I would guess he's really, really rich now because of stupidity. I think this is like stupidity making people wealthy. You did it. You made other people wealthy, you dumb bunnies.
So, okay, but back to where we started. The topic really is markets in general. Can you trade them and make more? Again, I'm going to go with Fama on this one. No.
Yeah.
Can you follow the crowd and kind of make more? Sometimes, until the crowd goes over the side of the cliff, right? And that does happen. We've seen it with technology before, et cetera.
The Dutch did it with their tulip bulbs.
That's true. That's true. Then they fell into the backyard with the dirt or something, right?
A few months later, they were planting $10,000 tulip bulbs in the front yard.
Good Lord. Good Lord. So, and what do you do as an investor? And like you always should, I mean, you have a plan, you diversify, you keep your costs low, pay attention to taxes, and you don't have to pay attention to what Eugene Fama really says. Because he's done the heavy lifting for you already.
Well, he's done a lot of heavy lifting. The guy's a Nobel Prize winner.
That's a heavy burden to bear right there.
And
so go, Gene.
And a professor at the university, professor emeritus at the University of Chicago, Booth School.
I think he still does one class a semester or something.
Yeah. I mean, he's the dude. He knows a lot of this stuff. And when you get really brilliant people like this warning you off an investment, what's their incentive? Do they have a financial incentive in warning you not to get involved?
He's not shorting Bitcoin? No?
No. Okay. As a matter of fact, Cliff Asness, who we mentioned earlier, said,
yes,
I would never short an investment that had 100% annual volatility or more.
There's a lot of risk in that. Yes, things can go backwards very quickly.
Or forward very quickly. You could be shorting it and it could double just because of the fact that it's driven purely by emotion.
Yeah,
and that was another argument in that article about the efficient market hypothesis, is that how can an investment be efficient when it serves no economic purpose? And that's the thing. Really, you can't make an argument that Bitcoin fills an economic purpose. Yes, it might be a hedge against world currency collapse, although the computers are going to still work then?
Tom and Don are talking real money.
You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
For your real life and real future, Tom and Don are talking real money.
And look at that. Just like that, we've driven the price of Bitcoin up
how much?
1/10 of 1%.
Oh, what? I was hoping down. I thought they heard us and said, sell.
No, we're
Okay.
we're contrary indicators. 855-935-TALK is our phone number, 855-935-8255. And we're going to take a call from California. You know that place. You're kind of from there, aren't you?
Kind of, yeah.
Clinton, you're up next. Welcome to Talking Real Money.
It is an honor to talk to you both. I mean, you guys have really helped me along well. I had called in and left a message, and I didn't give you all of the details. And I figured out that I should have given you more. I'm Clint from Antioch, and I left a message that about I have a Alaska retirement that I have to take, and my question is where should I actually park it now? I'm currently working. I'm a federal employee. And I'm not going to retire for at least another 2 years. So I do have my Roth available for the money to put money in. And I think that was part of the question is I omitted that I was still working.
Okay, so you have this retirement that you can roll over, a direct rollover from the Alaska plan to somewhere else. Is that the question?
Well, it's not. Under the rules, at 60, I had to take the payout. So every month I get a payout. I get my retirement.
Oh, you turned it into a pension.
And I don't. Yeah, it is a pension. I don't need the money.
So it's not a lump sum. You're just taking your monthly annuity payment.
Yeah.
Mm-hmm.
Yeah. Okay.
Monthly payout.
You
yes.
annuitize.
Mm-hmm.
Okay.
And you're saying what to do with the money that's being paid out of that? How soon until you're going to start needing that? That's the question.
Yeah, well, I'm not going to actually need. For my other retirements and other pensions, I'm really not going to need it at least for another 5 to 10 years, really.
5 or 10? Which one? Which one? 5 or 10?
I'm going to say 5 years.
Okay. I mean, if it was 5 years, and my colleague can argue with me, I think it should be in something very safe, like a high yield saving. I mean, because the risk of any type of security going down in 5 years is significant.
To me, it really depends on the flexibility of need. If you're absolutely sure you need it in 5, then cash. If you think, I want some of it in 5 and I'll take a little bit more in 6 and 7 and 8 and 9, and if need be, I can adjust it to 6 or 7 if the market is really bad and I just don't, if you've got some flexibility in your withdrawals so that you can in 5 years take a portion of that money because you need it and set it up as a regular amount that depends on the market value, then I could see having some stock in that portfolio, doing a stock bond portfolio or maybe all three, stocks, bonds, and high yield, a third.
Oh, okay. Well, that does make sense.
You could do that because the high yield will give you that immediate liquidity. The bonds will give you greater, shorter term stability, and the stocks are going to be the volatility and the hopefully bottom line kicker.
Wow. Well, as always, I value your opinion, and I keep listening to the show, and I find that I'm getting wiser and wiser when it comes to taking care of me and my wife's nest egg. So thank you for all that you guys do.
Thanks, Clinton. Those are nice comments. We appreciate it.
Yeah, that's very, very nice of you to say. Yeah,
we really appreciate it. 855-935-TALK is our phone number, 855-935-8255. If you've got anything going on in your life that involves money, then we really do want to help. I mean,
I got something going on. I'm just looked out the window. My wife is building a wheelbarrow for me. You know how handy I am. We started it before the show, and then
you put the wheel on.
More than that, of course. And
there are a couple of sticks you have to screw on.
I said, just let it go.
Yeah, nobody lets.
She said, no, I'll keep working on it. I said, no, just. She's so. Anyway, God bless her. She's out there
Nobody lets Tom near tools, and
Especially anything that
if you saw him,
motor on
you'd
it
know
or
why.
anything.
Speaking of money, I got this thing in the mail today, literally as I was coming in the house to do the show. It's from an organization called the American Financial Education Alliance.
Oh, yeah. Very educational, I'm sure.
Yeah. They're an IRS-approved 501c3 nonprofit organization, and they have a no-sell statement on here that they don't sell anything. However, the guy who's doing the teaching is a little bit suspicious. I don't know what he's registered to do, so I'm thinking about taking the class.
Tom and Don are talking real money.
Comcast is committed to bringing access to the internet to all Americans, including rural communities across the country, like Sussex County, Delaware.
We were being left behind. Everybody around us seemed to have internet, but we did not. High-speed internet is one of those good things that we needed to help us move our farming, our small businesses, our recreation forward.
Learn more about how we're bringing our next-generation network to more people across the country at ComcastCorporation.com/investment in America.
Reality radio for a really great future. We're talking real money.
Before we head up north to our Canadian caller, I have a little, since we're on the topic of cryptocurrencies, I have to
how is this funny?
To let this one
I'm
out.
Following.
Well, it will be when I tell you the story.
Oh, you one of those hosts that laughs at his own jokes, are you?
Oh, yeah, I'm laughing at the situation. I was just looking at what some of the highest market cap coins are.
Oh, we went through this list a little bit already, right?
No, yeah, but this one I missed until the break.
Okay, all right.
And I got to set this up properly. If this is what it's come to, why are you in any of these cryptocurrencies? There's a new cryptocurrency that started in November.
There's a new one every day.
Just started up. Well, you just let me tell the story. You're going to love the story. You got to wait for the punchline.
Go.
All right, here we go. This was created last year totally as a joke. Totally as a joke. It came out at 10 cents per coin and quickly rose to $3.50 a coin. A market capitalization of almost $4 billion in minutes for a joke coin. This coin was named by some the next crypto to explode. I personally just call it stinky. FartCoin.
Wait, FartCoin is worth how much?
$1 billion.
It's just one smelly situation, I got to say. I literally am going to turn my nose up at this one. Literally. I guess right there. That is
FartCoin. People are actually buying
Well, don't you have a sound effect or something to go with that?
To put up,
I mean, that's just okay.
No, right. I do not have a fart effect. I am not 11 years old.
I would.
I am not. I may act like it, but I am older than that. I mean, for goodness sake, people are willing to blow away $1 billion just to be entertained. We'd be happy to take $1 million from you to entertain you.
Yeah, okay, sure.
Maybe we should come out with the TRM coin.
I got to say, though, anyone who's following FartCoin has got to be pretty anal. That's a lot. Just you got to say that. So
I truly wanted to do this because I was curious as to how bad Tom's jokes could get.
And now you know.
855-935-TALK is our phone number. And speaking of spewing smoke in our general direction, let's go
one of the great exports from Canada.
Up to Canada.
Yeah, I'll tell you what.
It's one of the great exports from Canada these days. Smoke. Hey, Jeff, welcome to the program.
Dark enough here already. You go ahead. How are you, Jeff?
Guys, it wasn't my fault, I swear.
We're going to check your matches.
You didn't start the fire.
I didn't.
Actually, here's an idea. If the FartCoin's big in Canada, maybe you should start a fire. I'm just saying. I'm sorry.
So, you're gonna have to give me a bit of time to recover after all those jokes I was laughing. So you'll have to excuse me if I start chuckling during my question.
I'm just and you wait. And actually, a fart has more substance than the
and can we just add one thing, Jeff, for your question? Please don't make an ass out of yourself. That's all I can say.
Oh, no, you already did the ass joke. You can't do that one again.
Jeff,
you need to go in another
save
direction.
the show. What do you got, please?
Okay. So
you're usually more anal than that, Tom.
Oh, boy.
I know. It could get worse, but I can't imagine.
Go.
Okay.
Go. Do it.
Now, Don, I'm going to need you to do some fact checking on this because when I looked at it on Yahoo Finance this morning, I couldn't really believe it. So over the last 20 years, I believe the annualized average return for gold has been 11%. Does that strike you guys as crazy?
That sounds about right. It's had this huge run now. It had a pretty good, 20. Well, Don's taking a look, but yeah, I mean, it's had a pretty good run here the last year and a half. So, sure.
Okay. Well, yeah, I'll continue with the question while Don looks that up. So my question is, given that it's 11% average annualized, why wouldn't it be a good idea to use gold as a bedrock for your portfolio as opposed to bonds? I mean, Tom, I know you watch Deadwood, so
I watch Deadwood too, but I'm not going to lead and digging into the side of a mountain. Hang on with me a minute because I think your number may be off. We'll be right back.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey, welcome back to our show. I'm Don. That's Tom. Our number is 855-935-TALK, 855-935-8255. We want to talk about your money with you and try to help you make things make more sense. And we're doing that with Jeff in Ottawa, Canada. And Jeff is posing the question, why don't we, given the fact that gold has done so well over the last 20 years, why don't we suggest using gold instead of bonds or other fixed income securities to stabilize a portfolio?
Yeah, and I don't care about the return so much. Here's what I would care more about is what the type of security it is. A bond is an IOU, right? It's a note that says they'll pay you back with the interest and then give your money back at the end. Gold has no sense of those guarantees of any kind, right? It's simply a speculation. So just looking at it from that perspective, I would say, heck no, because fixed income provides fixed income.
And let me rebut this in a variety of other ways. One, the whole point of bonds is to reduce volatility. We don't own them because we think they're going to make you a lot of money. We own stocks because we think they might make you a lot of money. We think bonds are very, very low volatility. And, for example, take the period between 1980 and 2001, in which gold plunged from $700 an ounce to $250 an ounce.
Wow. Yeah, that's steep. Ooh.
Yeah. Now, let's add another kicker into that. Let's go back almost 100 years, just so we get the same time period. Let's go back to 1928. If you bought an ounce of gold in 1928, you would have paid about $21. If you put that same $21, now bear in mind, gold was more volatile at times than the stock market has ever been. That loss from 7 to 2 is bigger than any loss we've ever seen in the stock market. If you did the same thing from 1928 through now, and you did it on a 100% globally diversified portfolio of stocks, your $21, the same money you put into an ounce of gold in 1928, grew to...
I have no idea.
$500,000.
21 to... That's a game.
Why do you want gold?
Thanks for doing that fact checking, Don.
I mean, why would you want gold? It's a silly investment.
Okay, so
it's only good.
This actually ties into the show a little bit. You guys are talking about cryptocurrencies and Bitcoin and things that are considered cool these days.
Yep.
Since I've been a kid, I've always wanted a gold bar. And Tom, like I said, I watch Deadwood as well. You can't tell me that the idea of holding like a gold bar isn't a cool feeling, holding it and keeping it in like a safety deposit box. You know what I mean?
It seems more, if you watch from the show, that the thing they're carrying or holding more often was a weapon rather than gold in that program. But that's a whole other thing.
And, by the way,
or whiskey. I mean, you could invest in an alcohol company.
The only guy who ended up with any money. The only guy who ended up in it was Hearst at the end. I think he had all the gold.
And Al Swearingen.
Right? That's Swearingen.
From all the stuff dropping out of their pockets, all the dust.
Yeah.
I mean, you just go under the floor of the bar and you could like scoop up.
That's true. Yeah.
Fortune in gold dust.
We would not go along with that change from fixed income to gold.
In fact, we don't even believe in cool stuff. I don't want a gold bar.
I just thought it would be.
No, I think it's a good question.
I mean, literally, I could walk into Costco if they're still in stock and drop $3,500 and walk out with a gold bar. But then I'm going to have a gold bar. I put it on my desk. I come back 20 years from now, right before I die, hopefully.
Might want to lock it up.
You know what that gold bar is going to look like? The same darn thing it looked like 20 years prior. It's just...
Yeah. Jeff, thank you for continuing to listen and giving us a call.
We appreciate you.
Thanks for the smoke,
guys.
too.
Yeah, I figured your opinion was going to be the same as it always is. It's bonds versus bonds being the bedrock of the portfolio. I just figured I'd call and see what you'd have to say about it. The last thing is, I had no idea that you guys have a T-shirt. The show has a T-shirt?
Yeah, the show has a T-shirt, yeah.
Wait, you want one?
I definitely want one.
Okay. Well, here's the thing.
You can tell me how to get it.
I will tell you how to get it.
He'll wear it to the top of Everest. Oh, no, that's been done.
You can go on to talkingrealmoney.com and click on Contact us. Mm-hmm. Send me a note. I'll send you a shirt. And give me the size, too.
Okay.
Yep.
Okay.
Yeah.
All right. Thanks, gentlemen.
Thank you. Take care, Jeff.
Like I said, I had nothing to do with the fire.
Yet.
All right. We are boring, and I hate to admit how boring we are. We're anally boring.
It hurts. Let's the bathroom humor.
855. This is every episode just deteriorates into something these days. What is wrong with us? Let's go. Let's see. Yeah, I have time. Let's go to North Carolina. Zach, welcome to the program.
Hey, guys. Thanks for taking my call. Can you hear me okay?
Absolutely. Thanks for calling.
Awesome. Well, I hope not to be too anal retentive about this question, but I was wondering, I have a pension with the military. I'm working on my second one with the state of North Carolina. And when I worked in the private sector, I have a 401k. And now that I'm working for the state, they have a North Carolina pension plan. And what are the pros and cons? I don't think I've actually heard you guys answer this in the last year or so, to rolling over my old 401k into a new one that I'm contributing to, or do I just rock with two for a while?
The pros are, if you roll it over to the new one, you got one. It's cleaner. It also would allow you to do a backdoor Roth IRA if your income was too high, because if you roll it to an IRA, then you're going to have to do a pro rata amount. The cons are, in my mind, if the new plan is not that great, if it doesn't have good options, now you get all your money in a plan that doesn't have very good options.
That's great. Yeah,
I'm looking at it. They don't.
Yeah. Okay. So for most people, here's what I run into a lot is You come and see us, we chat it up, and you end up with, you have 5 or 6 accounts. And a couple of them have been left the same way for 15 years. Oh, I never rebalanced that because I moved on to a new job and da-da-da. It's just easier to have one for most people. Keep track of it. You can take care of it better, et cetera, et cetera. So, yeah, I'd probably, so the new plan you say, Don, is
it doesn't.
Very good?
No, it's okay. I'm sorry. I misspoke. I was looking at something else. They use their own funds.
They have their own funds.
They have their own funds.
Because you can't get anything good anywhere else.
And their index funds.
They've got big cap, small cap, et cetera.
Yeah, they've got small, they've got international, and let's see. Okay, no, I'm sorry. They have some indexes. Like their international fund I would not use because it's actively managed. Okay. Their large cap index I would use. The fixed income and the small mid. Other than that, I would skip the rest of them because...
Okay, but how do you do that? You can't build a portfolio then.
Because you build a portfolio in your taxable accounts and things.
I guess that's more work. So do they have a target date type of fund?
No.
They do not.
Nope.
They do not. Really?
Nope.
God, most plans now. I mean, it makes up almost 7%.
30%. I'm splitting it 3 ways. So I'm doing the
such an idiot.
Small cap and stable fund.
I'm sorry. I was on their active page. They do... Okay, wait. You can do an international index.
Okay.
There is an index.
Yep. Okay.
4 lousy little basis points.
Wow. I love that.
Their small mid index is 1 basis point. Well, 1.5.
Crazy.
And their large cap index fund is half a basis point.
And what stock to bond ratio do you have? What stock to bond ratio do you want?
I believe it's about 90-10, but I'm 36.
Yeah, he's young, so 90-10 makes sense.
We'll give you the ratios in a minute.
Tom and Don are talking real money.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
For your real life and real future, Tom and Don are talking real money.
I can help finish up with Zach.
Yeah, well, before we do, you want to guess what the how many stocks are in the North Carolina Large Cap Index Fund?
500.
Damn, you're good. All right, so give him an allocation
it's pretty
between
easy.
international,
This pretty easy, Zach.
large,
I can do it.
Small, mid, and bonds.
10%, he said he wants to be in fixed income. So I'd put, if the only one available is stable, because that's going to be.
No. They have a North Carolina fixed
bond
income index fund.
Okay,
with an expense ratio of 3 bips.
There you go. There's 10%. Then, wow, this is going to be complicated. 30% in each of the aforementioned international, large, and small.
Well, that was easy.
Bing, bang, boom.
I'm
You're
feeling
all set.
like a Staples commercial. Well, that was easy.
It was easy.
Yeah, that was way too
and,
easy.
Zach, thank you for your military service as well. So, yeah, that's what I would do. Pretty easy, straight up.
You're a better man than we were when we were your age.
Yeah, no kidding. Well, let's not go there. What do you say?
Not go there.
Yeah, let's not do that. Yeah.
I got my act together by my
mid
mid-30s to some extent.
I
wasn't
I'd say more like mid-50s maybe.
I wasn't as worthless as I was. So anyway, I want to let you know I did sign up.
Oh yeah,
I did.
You did sign up for your free. Is it a dinner?
No, they're doing this. They're doing this very, very wisely.
No more free dinners.
It's at a community center. So I signed up for it. It's an evening class.
God, I feel bad for this guy.
The topic is Social Security benefit options.
Oh.
Okay, and
I'll take the higher one. Can I just go ahead and make that claim?
They claim to never try to sell you anything. I don't believe that. So I'm dying to see what the pitch is because I know there's a pitch.
Are you going to be wired up? You're going to wear a wire?
I might ask because it's a class. I might say, "Can I record this?"
I'm going to audit this class. I need the information.
Yeah,
for later.
because I really don't take notes well. My hands, I've got arthritis, and I do. That's not a lie. I'm going to
a major one.
I'm going to record the class. I'll tell him, but I got to tell him. Florida's. If I was in another
who's the teacher? Who's the teacher? Did you look him up?
I'm not going to tell you until I check him out. I looked him up. He owns a financial services firm. But get this. His financial services firm, neither his firm nor he is registered
How could that be? How could you own the firm?
Not registered with FINRA, not registered with SEC, and not insurance license.
Oh.
What does that leave?
Bitcoin?
What does it literally leave?
No, I seriously do not know.
And he does what he calls, he's got a fancy trademarked name for his plan.
Uh-huh. Well, don't they always?
What can he, that's what I have to go. I even talked to Debbie.
Wait,
I said,
now you can call him the professor this time, I guess, right?
I guess, but I went to Debbie and I said, I want to go to this. Do you want to come with me? She goes,
no, she will not do it.
She said, I better come to keep you in line.
My wife would want me to sit in the back and keep you-know-what shut. So, yeah.
But I mean, can you see why I'm dying to know what this is?
Oh, yeah. This is a great mystery. I think you should live stream this on our website.
There are literally no clues in his website.
Registration. And maybe he works for somebody who's registered.
Well, but no, because then you have to be registered to work for somebody who's registered. You have to be an IAR.
Yeah, true.
It's required by law.
If you're getting any of the money. Yeah.
If you're getting any money. As a matter of fact, there's even an argument made for some who do newsletters that they have to be registered with the SEC.
Correct.
So
That's right.
I'm dying to know. Stay tuned in a future show. I think I'm going on the 12th of June. So keep tuning in. And if you want to ask us some questions, just go to talkingrealmoney.com. It's so easy. Talkingrealmoney.com.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.